Right. So let's come to the discussion of the MCQs asked in the September 24 inter audit exams. So that's a very great initiative taken by ICAI, wherein now they have also started releasing the MCQ questions, right? So that we get an idea regarding the level, the variety, and the detailing in which the questions are being asked by ICAI, which gives us the line of preparation for our subject for audit. Okay. Right, so let's come to the case scenario one. GHB Limited, a listed company having its registered office at New Delhi, is in the business of blending, processing, packing, and selling various brands of tea. BPP and Company LLP are appointed as the auditor for 24. B is the engagement partner for the assignment. Company has a centralized warehouse near the border at Himachal Pradesh. CAB's attendance on 24 at the physical inventory count in aspect of the said warehouse became impracticable on account of a natural calamity in that area. It also became impossible for B to perform the alternative audit procedure to obtain the evidence, right? So again, one of the favorite question for the exam, right, is essay 501, audit evidence specific consideration for selected item. And here the selected item is the existence and condition of inventory, right? So you perform the main audit procedure, that is attend. That is by hook. If you're not able to perform the main audit procedure, you perform the alternative audit procedure, that is by hook or by crook. But it says by hook also not possible, by crook also not possible. That means you are unable to obtain the evidence. Then you have only one option, SA 705, modify the opinion. Okay. Company had spent huge amount on employee benefits. Hence, CAB instructed his assistants to test the controls that the company had set around the employee benefit expenses. After being satisfied with the controls maintained by the company, he instructed his team to bifurcate the employee benefit expenses into salaries and wages, contribution to PF, expenses on ESOP, and the staff welfare expenses. Right? So bifurcation of the employee benefit expenses. So that is audit of items of financial statement, audit of the employee benefit expenses. Okay. Right. The engagement partner CAB, while evaluating, validating, reporting on the design and efficiency of IFC, also impressed upon the directors, independent directors, and the audit committee the way in which the Companies Act had put a great emphasis on the effective implementation and reporting on the internal control. Due to time constraints, CAB is under a pressure to issue a clean report in the limited time frame. He has insufficient time to properly perform or complete the relevant duties and issue the appropriate audit report. So that means he is not able to do his work as per one of the fundamental principle of PCDC, and a professional competence and due care. Okay. The board of directors wants CAB to certify the debtors to be sent to the bank without checking. CAB agrees as most of the professional income of BPP and Company LLP comes from GHB. They have undue dependence, right? So that's again a threat to the independence of the auditor, a self-interest threat. Hence, they are concerned about losing the engagement. Based on the above facts, answer 1, 2, 3, 4, 5. Since it became impracticable for B on 24 to attend the counting at the warehouse and also became impossible to perform the alternative audit procedure, CAB shall take management representation and mention about it in the emphasis of matter, right? Rely on the company's perpetual inventory records and also express an unmodified opinion. Omit altogether the audit procedure of the physical inventory counting from the audit program because of the impracticability, or modify the opinion in the audit report in accordance with 705 as a result of the scope limitation. Right? So the obvious correct option is the D. Which assertion concerning the bifurcation of employee expenses into various heads is being verified by CAB? Right, so he's checking whether there is the proper bifurcation done into the salaries and wages, PF, ESOP, and the staff welfare. Right, so is he ensuring the OCM, the occurrence completeness measurement, or the disclosure? Right, so he's verifying the disclosure. Okay. With reference to the reporting on IFC under Companies Act, which of the following does not fall within the nature of responsibility of the company? In accordance with the terms of reference specified in writing by the Board Act of every audit committee, Section 177, role of audit committee is to include evaluation of IFC and risk management system. Yes. DRS, Section 134, subsection 5, to state that the directors had laid down IFC to be followed by the company, and such IFCs are adequate and were operating effectively. Board of directors have to appoint an expert to state that the IFC of the company are commensurate with the size and nature of its business. In CARO clause 14A, we say that auditor has to report whether the company has an internal audit system which is commensurate with the size and nature of business, but not board of directors have to appoint an expert. And in terms of the code for independent directors, so section 149, also the schedule 4 to the Companies Act, to get themselves satisfied that financial controls and risk management system are robust and defensible, right? So 1, 2, and 4, yes, it is the responsibility of GHB, but board of directors have to appoint an expert, nothing like that. Right? So that does not fall within the nature of the responsibility. Due to the deadline, CAB has insufficient time to properly prepare or perform or complete the relevant duties, and he has to sign off the clean audit report, which fundamental principle governing ethics is disregarded by him. Right? So PCDC, professional behavior, integrity, or the objectivity. So it is the PCDC, as he has insufficient time to properly perform the engagement. Undue dependence on the fee, yes, creates which threat to the independence of the auditor? It creates the self-interest threat. Okay, right, coming to the case scenario 2. Christian Company is the firm of CA based in Punjab. CA KRISH are the partners of the firm. Firm is engaged in various audit assignments. The partners who are handling the respective assignments dealt with the following issues raised during the course of their respective audit. Christian Company is appointed as the joint auditor along with PK and Associates and RS and Associates for the audit of a large manufacturing company. K is in charge of the audit. They have divided their audit areas and also have identified the common audit areas which will be applicable to all the joint auditors. While forming the opinion, CAK had a different opinion, whereas the other two audit firms shared the same opinion. Both of them contended that as they were forming a majority, yes, the Christian Company will agree to their opinion, not at all. And a joint audit reporting, separate audit report in case of difference of opinion, not bound by the views of the majority of the joint auditors. R is conducting the statutory audit of Pawan Limited. He observed during the year that the company has issued shares at a premium and has transferred the amount received as premium to the securities premium account. He wants to ensure that Pawan Limited has utilized the amount available in the securities premium account for the purposes permitted under the Act, right? So that is audit of share capital, the application of the securities premium account. Registrar of Cooperative Societies has appointed Christian Company as the auditor of Nanda Cooperative Society for financial year 23-24. I is looking after the audit of the said registered society. During the year, in terms of Section 34 of the Act, with the sanction of registrar, society had contributed for charitable purposes as defined under the Charitable Endowment Act. CAI is required to ensuring requirement as to whether the contribution made is complied with. All the engagement partners, right? So this is regarding the audit of the cooperative societies. Okay. Now, all the engagement partners and the audit team of Christian Company have deliberations and discussions every week through Google Meet to review the progress of their respective assignment. During last such meet, CASH, the managing partner, briefed the team about the form, content, and extent of the audit documentation in terms of 230, while citing examples of records to be excluded as well as those to be included in the audit documentation. Based on the above facts, answer 6, 7, 8, 9. In case of difference of opinion between the joint auditors, what course of action can Christian Company take while issuing the report? They will have to agree with the opinion formed by the majority. No, we will disagree. They will have to agree with the opinion formed by the majority auditor, but they can mention their view in the emphasis of matter. No, they can separate audit opinion paragraph in the common audit report, or they can issue a separate audit report. So no separate audit opinion, but a separate audit report issued by the joint auditors, and the audit report issued will make a reference to each other report in the other matter paragraph. Okay. Securities premium account of Pawan Limited cannot be applied for which of the following purposes? in writing off the debit balance in the P&L, in writing off the commission expense and discount on the issue of shares or debentures of the company allowed, for purchase of its own share, buyback of shares allowed, for fully paid up bonus shares allowed. So what is not allowed? Application of securities premium account for writing off the debit balance in the P&L. CAI, who is in charge of audit of Nanda Cooperative Society, wants to ensure that the society has contributed for charitable purposes within the limits prescribed. How much is the society allowed to contribute for charitable purposes? Right. So one, it says contribute an amount appropriate rate as per the class of the society. That is for the education fund. That is not for the charitable purposes. Okay. Right, then contribute annually at the prescribed percentage of the profits as approved by the general body of the society? No. Or contribute 10% or 20%. So if you've not left the cooperative society audit an option, then you know that the provisions over there is 10%, right? So your knowledge is power. Contribute an amount not exceeding the 10% of the net profits remaining after the compulsory transfer to the reserve fund. Which of the following need not be included by the audit team as a part of audit documentation during handling of their respective assignments? Significant specific contracts and agreements to be included. Draft audit engagement letter, summaries of significant matter. Yes, that is called as the ACM, audit completion memorandum, as per SA 230. Checklist, yes. Draft engagement letter, that is your superseded documents, may not be included in the audit documentation. Right, so now coming to the case scenario 3. Mega Power Limited is a manufacturer of solar lanterns which are used in remote villages where there is no reliable supply of electricity. However, due to power projects undertaken by the government, the demand for their solar lanterns has significantly declined over the past few years. Company was in need of 2 crore for working capital and other expenses, which was not able to, but it was not able to fund this amount. Consequently, their suppliers were paid much later than usual, and some of them withdrew the credit term, means the company had to pay them on cash on delivery. This created a severe cash crunch, and the auditor feels that other than the cash crunch, there are several other financial indicators that may cast a significant doubt on the company's ability to continue as a going concern. The management of the company, however, assures the auditor that this is temporary and the situation will change soon as they are planning to diversify their business. They are ready to provide written representation for the same. Auditor feels that material uncertainty exists. Auditor wants the management to make the adequate disclosures in the financial statements. Auditor wants to include a separate section about this in his audit report. He is also contemplating what kind of report is to be issued. Right, so going concern assumption is appropriate, but a material uncertainty exists. Management, if they have made the adequate disclosures in the financial statements, auditor, you will issue an unmodified opinion with a MUGC, material uncertainty related to going concern paragraph. Okay, right. Then auditor has concerns about the ethical values and the diligence of the management. He is concerned about the reliability of the representations made by the management and the audit evidence in general. Auditor is of the opinion that representations from management are not reliable. That means auditor is unable to obtain the sufficient appropriate audit evidence. SA 705. Okay. Now, financial events or conditions that may cast significant doubt on the entity's ability to continue as a going concern does not include. Right? So, unable to comply with terms of loan agreement, financial indication. Unable to pay creditors on the due date, financial indication. Shortage of important supplies, okay. And substantial operating losses, again, a financial indication. But for shortage of important supplies is an operating indication regarding the going concern. It's an operating indication. And what kind of audit report will the auditor issue if the use of going concern basis of accounting is appropriate, material uncertainty exists, and adequate disclosure is made in the financial statements? What did we say? Unmodified opinion with a material uncertainty related to going concern paragraph, right? So it will be an unmodified opinion. If the auditor is of the opinion that representations are not reliable, what kind of opinion should be issued by him? Disclaimer of opinion, adverse opinion, unmodified with other matter, unmodified with emphasis of matter. No, it cannot be adverse, unmodified. It has to be disclaimer. Had they been qualified in the option, we would have considered that also. But here they've not given the possibility of qualified. Okay, now coming to the independent MCQs. DEF and Associates have been appointed as the auditors of JKL for the first time. Right? The engagement partner CAD is briefing his engagement team about the need of EQCS in the areas of financial statement audit and in the other types of assurance services. Out of the following, which point is not correct about why standards are needed? Right. So again, a question from the chapter number 1, wherein it could be asked as a theory question, and the same question over here has been converted into an MCQ. Okay, right. So standards equip professional accountants with professional knowledge and skill. Yes, that is why standards are needed. Standards ensure audit quality. Yes. Standards promote uniformity as audit of financial statements is carried out following these standards. Okay. Standards ensure carrying out of audit against the established benchmark. Looks fine. At par with local practices. That is where they have done the drafting error, not as per the local practices, but as per the global practices. So D is the option. Right, so see how it could come as a theory question and same question converted into an MCQ. Okay, question number 14. RDB and company have been appointed as auditors of INA Group of Hotel. This is the first time the firm is auditing an industry in food and beverage. The engagement partner CAR and other key members of the team have undertaken the activity of development of an audit plan of INA Hotel after thorough understanding of hotel business and environment. As per SA 300, of which of the following is not a part of developing an audit plan, right? So what is not a part of the description of the audit plan, right? So again, a question from the chapter number 2, audit strategy, audit planning program, which could be a theory question and we are converted into an MCQ, right? So nature, timing, and extent of planned risk assessment procedure included in description. Nature, timing, and extent of planned further audit procedure included. Other planned audit procedure to comply with the standards. Yes, and nature, timing, and extent of resources, that does not come in your description of the audit plan. Okay, right? The last question. The board of directors of a company wanted the auditor to certify, right? So certificate the export sales during the year for submitting to the authorities. The auditor also signed the confirmation letter. So certify export sales and sign the confirmation letter to be sent to various debtors and creditors for confirming their balances on 24. UDIN is required to be generated by the auditor for the reports and certificates and not for the confirmation letters. Okay. So export sales during the year only, confirmation letters only, both, and no UDIN is required, right? So only for the certificate, that is export sales during the year certificate only, right? So that completes our discussion of the MCQs in the question paper of the September 24.